Hello traders, welcome to UCFX. Welcome to another episode on Learn the Smart Money Concepts. Here in this episode, I'm going to be teaching how to trade the smart money concept. I've been trading it. So if you're new to this channel, I would recommend that you go and watch the previous episodes. That's episode 1 and episode 2 of Learn the Smart Money Concept to be able to understand enough value that we are going to be placing right here in this video. So I'm gonna start with listing out the stuffs that you need to know to trade the smart money concept. First of all, you need to know the directional bias of the market. That's you need to start from the higher time frame, that's from the monthly down to the daily charts to be able to know what the market is about to do. So I'm gonna list it as number 1, directional bias of the market. So you have to know the directional bias of the market. Then number 2, you have to find the recent order block that formed prior to the directional bias of the market. Let's say the market is trending down, you need to be looking for bearish order blocks. If the market is trending up, you need to look for bullish order blocks. So number 2, you're going to be looking for order blocks, OB. Then number 3 stuff you're going to be looking out for in this list is break of structure. After you must have found your order block, you need to look for break of structure after the formation of the order block. So you're going to be looking for break of structure. You mark it as the BOS. Sorry, number 3, BOS. Then the number 4 stuff on this list is you need to find liquidity. Liquidity comes in form of equal highs and equal lows. Let's say in a bullish order block, after identifying your order block, you mark out your break of structure. You need to wait for liquidity, which will be coming in form of equal lows. So you have to look for liquidity. That's the number 4 stuff we have on the list. The number 5th stuff that we have is you have to look out for the discount levels, discount prices. You have to wait for the price to come back to the discount levels after taking out liquidity. Just like I have in my previous video, you see the discount levels are marked out as 0.618 of the fib level, that's 0.618, and 0.786 of the Fibonacci level. These are the discount zones. We have the 0.5 as the equilibrium, and anything above the 0.5 is the premium price. So you have to be getting into the discount levels to get a nice entry. So you have to be looking at the 0.618 and the 0.786 of the fib level. Then after that, let's hop into the chart. Let me show you everything that I've listed out here. Let me show you how they work right from the directional bias of the market. Okay, so let's delete this stuff. Okay, yeah, let's have a rough sketch of what I actually mean. Let's say we are in an uptrend in the market. The monthly time frame is showing a bullish trend, and the weekly as well as the daily time frames are showing bullish market movement. So we have higher high, higher lows, higher highs, and just like that. So just like I said, you need to know, first of all, note the directional bias of the market. Right here we have if you have an uptrend, that's the first stuff you need to know, the directional bias of the market. After noting the directional bias of the market, you want to mark out the recent order blocks that have formed in the market. And if you look at the chart, you agree with me that there must be a recent order blocks right here. So after you must have marked out the order block, you need to ask yourself, did the order block break any structure. Is there any break of structure after the formation of the order block? Yes, we have a break of structure right here. So you mark it out as BOS. That's break of structure. After marking after marking out the break of structure, what we have next on our list, we have liquidity. So you have to mark out the liquidity spots in the market. You have to know where traders got trapped long. So, and liquidity in this scenario, we are going to be looking at equal lows. Let's say the market did stuff like this. So the market did stuff like this. So you're gonna be marking this out as equal lows as liquidity. You're gonna be marking this out as liquidity, equal lows. So you're gonna be marking out as equal lows. So right here, we have fulfilled this objective, equal lows. So after equal lows, you wanna wait for price to enter into discount levels. So you're gonna use your Fibonacci to drag it from the order block right to the high. From what you can see here, you will spot that price is about entering into our discount levels. Okay, let's say price does stuff like this, enters into the 4-hour order block. Okay, let's mark this out, H4OB. We're going to be marking this out as H4OB. So this is our H4OB. So you're gonna go down to the H1 or 15 minutes time frame. You're gonna mark out the same stuff right here. So let's say we have stuff like this. So you're gonna go down to the lower time frame to make sure that this order block is going to hold. So you're gonna see stuff exactly the same stuff that you marked out on the higher time frame. You're gonna see a break of structure. The same break of structure. You're gonna wait for liquidity as well on the lower time frame. Another tap into the other block that is formed on the 1-hour time frame. So you're gonna be marking out this place as well as another other block. Let me change the color. Yeah. So you're gonna be marking this place as another other block, and you have to mark out another lower time frame break of structure as well. You mark it out BOS as well. Then you have to mark out this place as liquidity as well. So just this basically like the market is just factor. All this stuff repeat in the same time frame, in on all the time frames actually. You can find it in the monthly time frame, the weekly, the daily chart, the H4, the H1, all of them. So for you to confirm an order block in the 4-hour time frame, you need to go down to the H1 and 15 minutes to confirm the entry. So right here we have another order block. You mark out this area as equal lows as well. You're gonna be marking this out. We have another equal low. We have another equal low right here, and we have our H1OB. So you're gonna be labeling that as well. So we have our H1OB. We have our H1OB right here as well. Then you wait on 15-minute time frame as well. Then you take your entry right here, and you could target anything above these highs, because price will definitely go above these highs to grab the rest of the liquidity that is in the market. So this is actually a framework of how this stuff works. So I'm going to be showing this same thing in a live chart. Okay, here we are on the Aussie dollar, AUD USD. Now we are here on the monthly time frame. As you can see, the market is bearish. We had a break of structure right here. We have a break of structure. So the monthly is bearish. So we are first of all trying to determine the directional bias of the market. So here the market is actually bearish. So after any formation of a break of structure, the market usually goes back to either mitigate an order block or an inefficiency in the market. So right here, we are going to be considering this range right here. So we have this range right here, and this range as well. So we're going to be considering this range for our directional bias. If you look well, you're gonna see an order block that took out traders that went long inside this area. So we have another block here. Just like I said, the last bullish candle before an impulsive move down, that's the bearish order block. So you have to be marking that out as well. So we have our order block, and if you look down in this monthly time frame, you will see we have a break of structure right here. We have a break of structure. We have a break of structure. You're going to be marking that out. We have a break of structure right there. After the break of structure, we have an order block formed inside this area, a bullish order block formed inside this area. As you can see, we had liquidity as well before price went inside, mitigated this order block, came back at the same place again before creating before breaking this structure, going higher. So right here, you can anticipate that the market is about to move back to go and mitigate this order block inside this area. And as you can see, before a mitigation is met in the market, you need to have liquidity. Right here, we have liquidity sitting all above inside the zone. So we could anticipate that price is moving up to go and mitigate this order block. So let's go down to the weekly time frame. Here in the weekly time frame, you could see as well the markets, you have a break of structure, a recent break of structure. So you have to be marking that out as well. We have a recent market break of structure. Then prior to that, which means the weekly is trying to turn out bullish. So we trying to agree with what we have here. We have another block here. So the weekly took out these highs. So we could anticipate that the weekly is about to change direction, or the monthly rather is about to change direction to go and mitigate this other block. So right here, you are going to go down to the daily time frame as well. So our monthly is bearish, our weekly is trying to turn bullish, and our daily as well is bullish. So just like I said, you have to look at the recent price action. So looking at this price action, what can you see here? You can see break of structure. So you see a break of structure right here. Hence, you can look for an order block inside this area. Let's go down to the 4-hour time frame to be able to refine this order block. Or better still, you can still see the order block, because after the formation of this candle, we had an impulsive move upwards, breaking this structure. So we have an order block inside this area. So after marking your order block, just like I said, you look for what? Break of structure. We have break of structure. You look for liquidity. If you go down to the 4-hour time frame, you're gonna be seeing liquidity inside that zone. We have liquidity here as well. We have our equal lows, this liquidity. So we mark it out as equal lows. Equal lows. So after our equal low, you can see price, the traders were trapped long inside this area. So they had to take them out to mitigate their this order block. So after identifying your liquidity, which is the equal lows, you will take your Fibonacci tool to determine where price is sitting at. Just like I told you, you need to be trading from discount levels. Now discount levels are 0.618 and 0.786. As you can see, price tapped into our discount level. Then after the price tapped into our discount level, what's the next step? Lower time frame refinement. You have to go down to the lower time frame. Right here we have the order block in the 4-hour time frame. So you have to go down to the lower time frame to refine this order block. Let's go down to 1-hour time frame. Right here in the 1-hour time frame, just like I said as well, you have to look for another order block formed here in the 1-hour time frame and another break of structure. Right here you can see we have an order block inside this area, and we have break of structures as well. As you can see, we have break of structures as well. After our break of structure, what next? Liquidity. You see our equal lows right here. So we mark it out as well, equal lows. We have our equal lows right here, and afterwards they grabbed liquidity. They took out traders that were going long inside this area. They tapped into this 1-hour order block, and this is where you could have taken your entry, right inside that zone. Let's say you're taking a long entry, you could be risking as little, and your stop loss will just be behind this order block. So you could be using as little as 16 pips and targeting all the way up. And targeting all the way up. You'll see. Let's go. Let's check on the 4-hour time frame. So your TP will be targeting the next order block. There's next bearish order block. As you can see, we have another block here. We have equal lows. So you will be targeting areas above these equal highs. So you could be having a 1:8 risk to reward ratio. That's what you could be having using this strategy. So risking as little as 16 pips, targeting 143 pips. That's a whole lot. So you could check out other pairs to know how to trade this concept the more. Okay, here we are on Euro card. As you can see, here we are on the monthly time frame. As you can see, we have a recent break of structure. Price took out these lows, and you ask yourself, where is price coming from? After taking out the lows, price actually went back and mitigated another block inside this area. So price is coming out from a discount level, so, and it's totally bearish. So we could expect price taking out these lows maybe in the future. So basically on the monthly time frame, you are bearish. You go down. Let's go down to the weekly time frame as well. On the weekly, we are bearish as well. On the daily, we are bearish as well. So we're gonna be looking out for uh, the recent order blocks that formed in the market. As you can see right here, we have a nice impulsive move downwards after the formation of this green bullish candle. So this is a nice sweet order block. So after the formation of this order block, you want to wait for a break of structure. As you can see, we have tons of break of structures. You can see it. We have break of structures all the way down. So you're gonna relax and wait for price to actually come back and mitigate this order block. As price is coming back, you need to see liquidity as well. If you watch out inside this area, we have enough liquidity. We have equal highs. In this case, we are having equal highs because this is a bearish order block. So we have to be marking this out as equal highs. So this is equal highs. This is our liquidity. As you can see, most traders were going short inside the zone. It came back, it formed this high first time, broke structure, came here again, broke another structure, came back here again, and it slightly did a stop hunt. If you could see that, it slightly did a stop hunt above, took out traders that were going short, and later went short again, came back to this same zone, take out, clearing all the liquidity. So inside this zone, after formation of the liquidity, after marking it out, you have to take your Fibonacci tool as well. Take from the point from the other block down to the highest point of the range. And after that, you need to check where price is currently at. Right from here, we have the price is inside our discount level, which are the 0.618 and 0.78 discount levels. So after marking this stuff out, just like I told you, the next step, you go down to the lower time frame to refine and get an entry. So in this scenario, we have a daily bearish order block. So you have to go down to lower time frame, to H4 lower time frame and H1 lower time frame for possible entries. Let's go down to H4 time frame. So here we are on H4 time frame. As you can see as well, you see this is the liquidity that got taken out, the equal highs that got taken out. After doing a slight stop hunt, they came back again, grabbed the whole liquidity. And after grabbing the liquidity, they tapped into our order block. You can see it, they tapped into the order block. So after tapping into the order block, you need to mark out another order block that formed inside this area after a break of structure. As you can see, we have a clean break of structure inside this area. We have a clean break of structure. We have to be marking this out as well. We have a break of structure inside this area. As you can see as well, we have an order block formed inside this area. Let's go down to 1 hour time frame to refine this as well. So here we are on the 1 hour time frame. So let's check it out. So here we are on the 1 hour time frame. As you can see, we have a nice order block as well sitting here, just slightly above liquidity. You see we have another liquidity inside this zone, so you have to be marking this stop here out as well. We have liquidity. So equal highs. We have equal highs here as well. As you can see, this is our liquidity. So you take your fib as well. If you check it, take your fib as well, mark it out from the top to the down. You can see it, price nicely tapped into our discount level on 1 hour order block. You can see that price nicely tapped into our discount level. So you could take an entry inside this zone. You could take an entry inside this zone and have your stop loss just slightly above the order block and targeting all the way down. Remember, this is actually a daily order block, so the impulsive move downwards is gonna be a massive drawdown. So you're gonna go back to the daily time frame to actually know where you'll be taking your profit. As you can see on the daily, we have, remember we are taking our entry inside this area, so we have this low that was created. So you need to be targeting these lows as well as your take profit. So if you go to the 4 hour time frame, let's see how many pips we could target an order block inside this area as well. As you can see, we have a little order block inside this area. So let's say you could target that and you could get a 1 to 9 risk to reward ratio. I think that's a great trade right there. So these are live chart that I'm showing you. Everything I mentioned inside, everything I mentioned right before I started the video, I'm showing you all of it right here in the live chat. So maybe we could take another pair for this, and then we call it an episode. Okay, here we are on US 30. As you can see, we are on a monthly time frame. There has been a recent break of structure to the upside, so we could say that the market is actually bullish right here. So if you go down to the weekly time frame, I think the market will be turning bearish inside this area. The market will be turning bearish inside this area. So considering this range right here and this range, you could say that market is trying to retrace to mitigate an order block. Let's say to mitigate this order block. So let's mark it out. The market is trying to mitigate an order block inside this area. So prior to that movement, if you go down to the weekly time frame, you can see as well the market is entirely bearish inside this zone. You go down to the daily time frame, the market is bearish as well. So having this in mind, that the market has created an broke structure on the monthly time frame and is retracing back probably into an order block formed in the monthly time frame. So you have to be looking for bearish order block to take entries down into the monthly order block that is about to be mitigated. So right here on the daily time frame, you could spot a nice order block. We have this order block. We have this other block inside this area. We have another one inside this area. Let's say this price action has not taken place. you just have this price action, this only from this range to this range. So after price must have formed this other block and you marked it out, you just basically wait for either of the other blocks to be mitigated to continue the downward movement. Right here you can see how price entered this other block. So how are we going to know that this other block is going to hold? As you can see, just like I said in the previous examples, we have liquidity inside the zone. So other block needs to break structure. We have a break of structure here. As you can see, we have another break of structure here. So that's enough to anticipate that the market might actually reverse from this area, because we have, if you go down to the forward time frame, you will see that we have liquidity sitting right inside that area. Right inside here, you can see it. We have liquidity sitting inside this area. We have an equal high. So you mark it out as well. After seeing that we have an equal high here, for you to get another confirmation that this other block is going to hold, just like I said, you need to check, use your Fibonacci as well, mark, see where price is at. As you can see, we have price exactly at the same discount level, 0.786 Fibonacci level. So you will have to go down to the lower time frame as well. Right here we are on the forward time frame. You need to go down to the lower time frame, let's say the H1 time frame. So checking on the H1 time frame, you need to as well find a break of structure and an order block. Right here on the 1 hour chart, you can agree with me that we have an equal high here. We have equal high there. We have equal high right here. Behind the equal high, you could spot out an order block inside this area. Let me change the color. That is an order block. So behind this equal high, you could spot an order block. After the formation of this order block, we had a break of structure. Price broke this structure right here. We also have another break of structure right here before price now went back up to mitigate this other block. So this is actually our lower time frame confirmation. This is actually how to confirm if that daily order block is going to hold. So as well, you take your Fibonacci, mark it out from this order block down to the lows. As you can see, price came back again and mitigated our discount level, touched our discount level 0.786 Fibonacci level. So the whole thing happened down to the 1 minute time frame. So the market is actually fractal. You can see it, you can spot it in the daily time frame, the forward time frame, the 1 hour time frame, all along. So but the other blocks that are most effective, that are most likely to work out, are the other blocks that we find on the daily chart and the 4-hour chart. So you know, the daily and the monthly, weekly control the lower time frames. So you need to be looking out for other blocks that are formed in the daily chart, the weekly chart, and the rest of them. So this is how you could have spotted a nice trade. Let's see how many pips. Let's say you took an entry right here, stop loss above this order block. That's about how many pips? You know, this actually US 30. So the pips are actually you need to have a nice tight stop loss. So as you can see, we have about 200 pips. That's huge, right? Maybe you could use a small lot size, risk management. So let's go down to the let's go to the 4-hour time frame. Let's see how many pips that we might have caught on this trade. So as you can see, you could target these lows. Because definitely the market will have to come back to that area. If you had targeted lows, you would have got about 1,825 pips. Wow, that's huge. That's about 1 to 8 risk to reward. So it's still massive. So in any market condition at all, you could use the smart money concept to trade anything. So it basically gives you those types stop losses and huge risk, huge take profits and huge risk to reward ratios. So that's basically all we have in this video, and I hope you do due diligence by going back to backtest everything that I have shown you in this video. Because if you go back to backtest, you could see how price works and how price can work after marking out your order blocks. You wait for break of structure, liquidity, use your Fibonacci, mark out your discount levels, then go down to the lower time frames, look for the same stuff. You look for another order block formation, break of structure, equal highs or equal lows, just liquidity and mitigation into the lower time frame order block, and then you take your entry. So that's how all we have for this video, and I hope you find it nice, and you could hit the subscribe button and the bell notification button to be receiving videos and stuff like this for free.